Hi everyone, welcome to another Weekly Forex Forecast for the week ending April 10th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the EURUSD, the Pound USD, the dollar versus the Canadian dollar, the euro versus the yen, as well as gold. I think we could have some incredible opportunities setting up on the dollar CAD as well as the euro yen, so those are two that I'm keeping a very close eye on in the week ahead. Let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the EURUSD, and as you can tell, the pair broke through several support levels last week, including 110.10, 109.50, and the 108.25 area. So notice how 108.25 served as resistance back here. It was support on Thursday, and Friday then closed below that level. So depending on where Monday opens, this 108.25 area is going to be resistance, and as for support, 107.25 is going to be the level to watch in my opinion. So not only is that the bottom of this descending channel that extends from late 2018, but 107.25 was also that previously open gap from April of 2017 that closed back here. So 107.25 is support, 108.25 is resistance. Now, of course, if we see the EURUSD close back above 108.25, we could see another run at that 109.50 area. But as of right now, I have no interest in trading the EURUSD simply because of this increase in volatility combined with a lack of momentum. So yes, we had this breakout back here, but that turned out to be false. The same thing about this breakout down here. That also turned out to be false. And right now, the pair is still just moving sideways. So it's stuck in this consolidation. And if you look at the monthly chart, you'll notice that last month, the month of March, closed as a giant indecision candle. So even though we've seen these false breaks up here and down here, right now, this channel is being respected on a monthly closing basis. So until we see a month close either above or below this channel, you can expect this sideways price action to continue. So I'm going to stand aside on the EURUSD right now because of this increase in volatility and also the lack of momentum. I also think that there are better opportunities out there, which we'll discuss momentarily. Next up, we have the British pound versus the US dollar, and we can see where the pair sold off from that 124.70 area last week. So this is a level I've had on my radar for a while now, and you can see where it topped out on several candles here and then sold off on Friday. Now you can also see where 122.00, this is the level I talked about last weekend, served as support. Friday's low touched right off of that level and bounced. So as for the coming week, it's all going to depend on whether or not the pound closes below this 122.00 area or decides to rotate higher up into 124.70 and break above that level. However, just keep in mind that we have the bottom of this descending channel that will likely act as resistance on the way up. So if we do see a breakout from 124.70, expect this lower level just above 124.70 to come in as resistance. On the flip side, a close below 122.00 would expose the next key support around 120. So this was the previous 2019 low, and you can also see how this candle right here found support. But I'm going to give the same warning I just did about the EURUSD, and that is that right now, especially over the last week, we've seen a lack of momentum from the British pound, and furthermore, we also have this increase in volatility, which makes trading more difficult because it's much easier to get stopped out now because of the range of some of these recent candles. Furthermore, I like to trade patterns instead of just key levels, so I'm not interested in selling a break below 122.00 or above 124.70. I need some type of pattern to play here, just like we had back here with this ascending channel. To me, this was the ideal scenario where we got this retest of former channel support as new resistance, and we then had this massive sell-off. So this was the opportunity back here, And as of right now, yes, you could have looked to buy down here, but this back here was the A plus setup. So for right now, I'm going to stand aside and see what the pound does over the next few days and weeks. If we do get another pattern that develops, I'll look to play it. But as of right now, I don't see a whole lot to do here. Next up, we have the US dollar versus the Canadian dollar. I spoke about this one a couple of times last week, where I noted this descending channel that appears to be a continuation pattern following this massive rally from earlier this year. So if this plays out the way I think it will, this right here is consolidation, also known as a continuation pattern, where a close above this resistance level could send the pair higher up to this previous high around 146.50. However, just keep in mind that we first need to see a close above this area. Furthermore, we have this short-term trend line that extends from some of these recent lows that I also pointed out last week. And this is why I'm a fan of trading on the 4-hour and daily time frames, because anybody that tried to sell Friday's dip below this level got stopped out. So notice how this 4-hour candle did dip below that support level, but then closed back above it. Furthermore, this final candle into Friday's close rallied quite a bit off of that support level. So even though I want to see a close above this resistance level, it doesn't mean that it's going to happen this time around. For all I know, the USDCAD could break this short-term support level, rotate lower into this 13800 area. But either way, I'm only interested in buying the USDCAD simply because, as I mentioned earlier, this looks like a continuation pattern of the recent rally. And if it is, we could very well see a run not only at 146.50, but also the 150 area. This 150 area is going to be the measured objective if we see the USD CAD close above that resistance level over the coming sessions. And if we do see a rotation lower this week into 13800, let me show you why I like that level. First of all, it's a previous swing high from back here in 2017. So notice how we have this swing high back here. And it's also the 50% retracement of the year-to-date range. So if you'll notice, these lows down here are the current year-to-date lows, and this of course is the year-to-date high. Notice where the 50% level comes in, right around that 13800 mark. And furthermore, you can also see where 38.2, the 38.2% Fibonacci level, has been serving as support recently, just as 23.6 is right now serving as resistance. And if you notice on that chart I just showed, there is the potential for a double top here. So if you look back here, notice how we have these two tops. So this recent rally actually stopped at a previous swing high up here around 146.50. However, here's why I don't think that this is a double top. There's another pattern that broke out recently, and if we look at the weekly time frame, you can see where we have what appears to be another continuation pattern following this multi-year rally. So we had this multi-year rally, and then the pair consolidated for several years and recently broke out from this pattern. So if this is a continuation pattern, we could very well see the USD CAD move much, much higher over the coming weeks and months. But in the short term, it's all going to come down to this smaller channel and whether or not buyers can break that resistance level in the coming week. If they can, again, I think 146.50 is going to be the next resistance level to keep an eye on, whereas a break below this short-term trend line could send the pair lower, perhaps down into 13800. So I wrote about the Euro Yen on Friday, and I told members that because of this recent multi-year breakdown, so this trend line right here extends from the 2012 low, you can see where we have this low here and also this one. The pair then broke down and retested that level as new resistance last December and January of this year. So because the pair is just now coming off of that level, I do think that we have further losses ahead. However, it's all going to come down to the 116 area. So as of right now, 116 is serving as support. So the pair needs to break through 116 in order to see a run at 111.40. So I think that 111.40 is going to be the next key area to keep an eye on if we do see the Euro Yen break 116 on a daily closing basis. Alternatively, we have this short-term ascending channel that on the intraday charts could offer a short opportunity in the coming week. So if we see the Euro Yen gain strength on Monday and Tuesday and move up here to retest the bottom of this channel somewhere around 118.50, that could present an opportunity to get short for a move into 116 with a break there taking on 111.40. And the reason I like the short idea here is because the downtrend is still very much intact. So if I move out to a weekly time frame, you can see where we have this descending channel that represents the downtrend, which is still intact. In fact, the pair didn't even retest the top of this channel, which is a sign of weakness. And as for 111.40, let me show you why I like that level as the next key support below 116. So if we look at the monthly time frame, you'll notice that going back to the year 2000, 111.40 has been a key level for the pair. So back here, it was resistance, resistance again, and then it turned to support. You can also see where it served as support on this candle. It did get messy through this area, but then notice again, 111.40 started to serve as resistance. So for the week ahead, there's two ways to play this. If we get a run at the bottom of this channel, you could look to sell up around 118.50 for a move down into 116. Alternatively, if we see the euro yen close the day below 116, that could open up the next key support at 111.40. Just keep in mind that this 116 level, because this level is so significant, it is going to take a daily close at 5 p.m. Eastern below 116 to open up the 111.40 area. I wanted to discuss gold or XAUUSD this week because I know a lot of you have been asking about the price action here. And to start, I want to show you the weekly time frame because I think that's what we have to look at right now in order to make sense of what's been happening. The market has become so incredibly volatile that trying to trade this on the daily time frame is increasingly difficult. So if we look at the weekly time frame, we can see where 1550, this is a level that I've had on my chart for several months, is still a key factor. So if we see a rotation lower into 1550 this week, followed by some type of bullish price action from that area, we could see a return higher from gold. Now, of course, resistance comes in just below 1700, around 1690. So that's going to be the resistance level to keep an eye on. If we do see a break of 1690 on the daily time frame or perhaps even the weekly time frame, that could send gold higher up into 1790/1800. So the 1800 area is going to be the next resistance level if we do see gold break out from some of these highs just below 1700. On the flip side, a close below 1550 could expose some of these lows down here around that 1450 area. So these are really the four key levels I'm keeping an eye on right now: 1450, 1550, 1690, followed by 1800. As for where we go from here in the near future, it's a little difficult to tell simply because, like a lot of other markets, the last 2 months have produced indecision candles on the monthly time frame. So whether or not we head lower from here or higher is really anyone's guess. If you're unsure, the best thing to do is to stand aside and wait for either a retest of 1550 or a breakout from this recent consolidation. That's the best way to approach a market that is moving sideways in a volatile fashion like this. However, I do want to caution someone looking to sell gold simply because this uptrend is very much intact. For years now, we've seen gold trend higher. And even this recent rally, so I'm looking at the monthly time frame now, and even this recent rally back here, which of course was during the 2008 financial crisis, this recent pullback, we now have what could be a higher low down here. So if we see gold start to break out higher from this recent range, break 1700 and head up to 1800 area, which of course is marked by these highs back here, that in my opinion would start to confirm the fact that this is a higher low. And of course, if we see gold break out to all-time highs in the next few weeks and months, that would absolutely confirm this higher low and also give us a potential higher high. So again, I would be very, very careful about trying to sell gold, especially while it's above this 1450 area and even 1550, because I do think that the uptrend is intact, which means that watching for longs from support seems to be the best way to play gold right now. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.